everyone, my name is Francesca. I'm Italian living in London, and here I talk about investing, personal finance, the market, business, and everything else related to that. So if you're interested in that, then stick around. You might have noticed a bit of a change in background. This is because I changed my surroundings for the time being, but I shall be back to my usual background in no time. But for the next few videos, that's what you'll be seeing. And yes, so hopefully that's not too upsetting or too different for you guys. But today I wanted to do a video related to one of my most popular videos that I've done here, which was on the life strategy offered by Vanguard, the investment management platform. So I thought that today I would be doing a bit more of a review of the other Vanguard products that they have on the website, what they offer, and whether this could be a good for you depending on your investment stage. So if you're interested in that, then stick around and keep on watching till the end. So to begin with, though, Vanguard is one of the main investment and wealth management institutions in the world. It became famous because of their no-fuss approach to investment, and that is because they essentially specialized in tracking the main indexes. So this means that they have specialized in index funds and ETFs or exchange traded funds. So Vanguard became famous because they specialize in this type of investment. Now, at the very beginning, when they first started out doing this, there was a lot of skepticism around this because more day traders, like active investors or the professionals in the city and on Wall Street, they thought that if you were just mimicking and following the market and those main trackers, then you didn't have a chance of beating the market. And they're right in this, because of course, if you're just following what the market does, you're not beating it. But actually, this is the strength of ETFs and index funds, and it's been proven that the majority of gains are to be made in this way for the average investor, and that those active investors that try to beat the market rarely actually manage to. So this is the context around Vanguard and what they do. The other time we've talked about primarily the Life Strategy 100 funds, which is a subclass of what they offer, and it's basically a ready-made portfolio with a set allocation of stocks and bonds depending on your risk tolerance. But this is just like one of the things that they offer, one of the products that they offer. Now, the other ones that I wanted to touch on, they do change country by country. So, for example, in the US, you will have slightly different types of products, and they also have different names. So, for example, in the UK, we have something that's called an ISA, so an individual savings account, which in the US, the most comparable product to that would be an IRA, I believe, which is basically a tax-free wrapper to your money invested that you have. But in essence, they have very similar products all in all. So in essence, they have a very similar product all in all. And now you can see here we are on the Vanguard website, just so that you can see what they offer. And again, if we go up here, so on kind of why Vanguard, here what we offer, you'll see life strategy funds, which are the ones that we discussed already, right, in the other video. And again, as a reminder, basically, or what they do is, you choose an asset allocation that you feel comfortable with, and then this is what they utilize for your investments. Now, of course, my internet's not loading, but anyways, no problem there. Let's just go back here. If we go back to what we offer, then we have target retirement funds. Now, what they are, and this is quite interesting, is basically a pension, pretty much, but a pension that you take control over, meaning that you will choose a set a retirement date that is closest to when you plan to retire. And basically, what Vanguard will do is, invest your money for you, and then as you get closer to the retirement date, they will rebalance your portfolio and your asset allocation based on your decreasing risk tolerance, right? Because as you approach your pension, your retirement age, and it means that you will need the money, right, sooner rather than later, so you can tolerate less risk, right? So you want to have the money with you, readily available, and so that's why they do that rebalancing of your portfolio directly for you. And so this you're seeing here, some examples of target retirement funds. So they ask you, when do you want to retire, whatever your target date, we have a fund for you. There are small costs as always, but here you can see, for example, you have target retirement 2015. This is of course outdated now, but you have all types of retirement funds, right? So target retirement 2040, 45, 50, and you can see as the time progresses and as the timeline gets longer and longer, you can see that they allocate more and more space to equities, right? Rather than bonds, over bonds. So the maximum that they allocate to equities is 79%, over 20% bonds. But yeah, so these are like for the target retirement funds of 2050 and over. So yeah, so this is something that you might be interested in if you are already thinking about retirement, which I think you should, and if you don't have a workplace pension where they match your contributions. If you do have that, then I would prioritize those, so the employer matched pensions over the Vanguard ones, and then maybe should you need more, then yes, maybe revert to Vanguard as well. Then we have some active funds, so index funds which are passive, as we discussed, and this is the whole point of having Vanguard and of their kind of theory behind investing, which should be passive. They do, however, also offer a small selection of active funds. Which could be counterintuitive maybe, but I think that they wanted to also offer that for some of their user base that might still want to have that more tailored, I guess, approach to investing. And so you can see they're still pretty balanced. They still try to keep them fairly safe, I want to say, even though again, like, I'm not a fan of using that word in connection to investments, because there's never like a secure investment 100% by definition. And here you can see there are some that are blended, so it's like a mix of equities and bonds, and then other ones they divide them by geography, so you can see Europe or global, and again you can see the different types of funds that they have. So as we discussed, there are different specializations of funds. So for example, this is FTSE Developed Europe X UK equity, and you can see that this one has a higher risk level, like, so 7 is the max, this is a 6, so quite risky. And then yeah, you can just see, so when they're passive, when they're merely just tracking an index, they will be looking like this. So this is ESG World All Cap Equity Index Fund, etc. So they just specify the different focuses of the funds, and then when they are active, they will have this denomination, this tag here, right? So it's pretty easy to tell them apart, and I think that they do a very good job as well of kind of making investors aware, of whether a fund is passive or active. Now, if we were to look, for example, here, we can click on one, let's say this is like an active one, and as always, they go into more details. They tell you pretty much everything. So they tell you, what the NAV price is, 220, the chain that it had is gone up, number of stocks included in the fund, which is quite interesting. This one invests in large number of companies, bringing you benefits of diversification, which is very good. These are like the transaction costs and the ongoing charges, which are still pretty low, but higher than the average, kind of like the usual ongoing charges that Vanguard applies. And yeah, so here it goes more into detail, kind of what the objectives are of these funds, of this fund especially, and it kind of gives you the average returns. Again, like past returns are not an indicator for future returns as always, but it's a good indicator. They do that against the benchmark, which they use the FTSE Emerging Index. Since this is a since this is an actively managed fund, that's why they use also benchmark to measure their performance against. And you can see that in the past year they've done pretty well, 56% of growth. And then though you can see that when it went very negative, last year until March they did at 20%. So yeah, you can see big swings, but again, potential for a lot of returns and great returns. But yeah, so this is pretty much it. So this is what an active fund will look like with Vanguard, and you can see who the investment manager is. Then, if we wanted to look into the kind of like the other types of products that Vanguard offer, we have your average ETFs and your standard ETFs. Now, again, ETFs stands for exchange traded funds, very similar to index funds, and you can see also by their definition says that invest for long term and low cost. ETFs are very similar to unit trust or EICs, but they trade on a stock exchange. So what that means is basically they are similar to index funds, but they trade on the stock exchange, which is what we talked about before. So again, here you have all the types of ETFs that you can choose from. Again, they divide that by geography, which I find very, very useful. They always detail the risk level, NAV price, so all the main indicators you have at a glance, so you can have access to that, all in one place, and I think that's very, very useful. So we have now seen all the different options that Vanguard offer, and all the different products that you can get access to if you choose to go with Vanguard, which again I think it's a great place to start and a great one-stop shop pretty much for any needs that your average retail investor might have. There are of course some caveats, and there are reasons as per why I don't use Vanguard right now. So I use them as a benchmark, if you will, so I use them as a template for my investment choices, but I don't use them. And that is because I feel they have some limitations. So, for example, there's no app for Vanguard, which again, I don't think it's a huge downside, which again, I don't think it's a huge con, because it kind of reflects on the fact that it is a long-term strategy that you are playing with when you invest through Vanguard, right? So you don't have the need of daily checking your investments and how they're doing. However, for me, I like doing that. Like it's one of my passions, right? One of my favorite hobbies. Kind of everything related to personal finance and all this. I wouldn't have this channel otherwise. So what that means though is that I really enjoy the app experience, and kind of having a platform that is optimized for smartphone use. And so this is something that, for example, Trading 22 has very well. This is a big con for me that has moved me away from Vanguard. But again, I don't think it's necessarily a huge con for your average person, just for me personally. One other thing though is that it is pretty restrictive when it comes to the selection of funds that you have. Now, of course, Vanguard, they have their own ETFs and stocks, and their own products. So that's why when you're using the Vanguard platform, you are limited to only Vanguard products, right? So, and instruments. And this, I feel like it's a big, big limitation. This is why it might be better for you to spread your investment across different providers and companies that have other different ETFs. And you can achieve this by using free investment platforms like I talked about Trading 22 again because it's the one that I use. Otherwise, you can use Free Trade, you can use Robinhood, I think if you're in the US. There are so many other ones, eToro, Webull, the Giro, so many ones that offer Vanguard products among other ones. So for example, they have again the benefit of offering not only Vanguard ones, but also from Invesco, Fidelity, iShares, and so many other ones. So if you want that flexibility, if you want that choice and that broader option, then definitely go for providers. And they usually offer this for zero fees, right? Because these investment platforms have zero commission fees. So even though the Vanguards are pretty cheap, as we've seen, so at 0.15% or so, zero is still better than that. So, Vanguard, I think that overall is a great choice if you're just starting out, if you don't want to think about your investments and you just want one place to put your money in and then let them do the work. Otherwise, if you want to have a bit of a more tailored approach, then maybe use them as a template as I do, and then do your own research and tailor your investments. I hope this video was helpful, and then I'll see you in the next one.